less than 50%, a little bit more than 50%. The
seller
came
carry
back
for
and
the
did
other
a seller
half.
carry difference for the
This
other
isn't
half.
done yet, right? These are all deals that are in process, so we'll see what happens. So I get a question. We're looking at somebody for a 100% CLTV purchase.
Okay.
Are we at a minimum looking to see if they can make a couple months payments?
No, we don't look at income.
Because how do you know they're not going to be a first payment default?
How do I know?
I mean, what's
how do I
the
know
monthly payment on a $3 million loan? That's going to be
300 divided by 12, 360 divided by 12, 30,000 a month, a little bit more.
30 grand a month.
But you're missing
That's
the
the
point.
loan payment.
I don't care. Listen, you're missing the whole point here, Tim. How do you know that that borrower that has an 850 credit score that I just lent 50% loan to value to, that has great income, this, and this, how do you know they're not going to be a first payment default the next day? Things happen to good people. At least when you're lending money to people that have bad credit, they can't get any worse. You already know what you're dealing with, and that's kind of our theory over here.
All right, no surprises, right?
No surprises.
We assume every deal could go bad, and we lend that way. And that way, if it's good, then we're pleasantly surprised.
Right.
And if it goes bad, we're like, yeah, we knew it was a funky deal. All right, well, that's a $3 million loan, so if you brought that one in, you'd be pretty happy. Next, we're talking about a shopping center. I don't know if you know exactly which one this is. All right, so strip mall shopping center. This is a purchase. And this one seems to be moving pretty quickly, right?
It's moving pretty quickly.
Except for the appraisal, we got to wait maybe 3 weeks on this one.
About 2.5 to 3 weeks.
Commercial appraisals are always a little bit slower.
This is a really interesting deal because of the tenants that are in the deal. It has national tenants in this deal.
Okay.
So I don't care what the credit looks like. The lady, again, is not putting any money into this one. I don't know if you were aware of that or not.
No, it's a 100% purchase, 100%
It's another
CLTV.
100% CLTV deal.
So the people selling it are agreeing to a 50% or
Carry
40%
back.
carry?
40% carry back on this particular deal. And it's a great deal because you have very strong tenants in the particular shopping center.
Okay, all right, so good tenants. So it's one of those things that helps shore up a questionable borrower.
That is correct.
Now, what's this silent partner thing? We put silent partners in quotes on here because I think most banks hear silent partner, they say rubbish. Get out of here, that's weird. We got a borrower with bad credit and no assets, but a silent partner.
The silent partner,
what is that?
I think this lady had come up with a little bit of money. We're talking like maybe 20 grand total on this large transaction.
For just closing costs or
Not
whatever?
even. And she couldn't even come up with that, so she found a partner that's coming into the building that's coming up with the 20 grand for her.
Okay, that's the silent partner. All right, so $1.1 million loan is what we're looking at, 12 months interest only. You know, that's what we do. It's all bridge financing here. And it's mostly weird because we got a borrower with bad credit, no assets, no money down, looking to do 100% financing. We love that stuff.
Right.
All right, next, let's talk about the senior center. This is a big deal for us. I'm calling it a jumbo refinance. This group owns a senior center, and they're looking to pull cash out of it to put into other projects, or they want to renovate the project?
They're putting it into other projects.
And they want to move very quickly. I would say the thing that's most interesting, there's two things that are really interesting about this deal. One thing is they're bringing in outside collateral to help shore up the deal, which is great. We always like that. But our loan is going to be in third position. We're going to be behind two other loans. Now, we always say we want to be in first position. So how is it we say we want to be in first position, but now we're going to be in third position? That sounds risky. Why does that make sense for us?
We're doing what's called a wrap mortgage, where we actually take the first and second mortgage. It's called an all-inclusive mortgage or an all-inclusive trust deed. We wrap those two mortgages that are in front of us. They might be at 5% interest. Our interest rate may be at 10% interest. Because we're taking that added risk of going into a second or third position, what we do is we make the difference of the spread between the first mortgage and our loan. So there's advantages and disadvantages for your borrower. Number one advantage is I will make second, third mortgages if I can wrap the first mortgage in their favorable terms.
What's favorable terms, right? So if their first mortgage is 12%,
no,
we don't want to wrap it at 13.
We're not interested.
Right.
It has to be favorable terms, typically like a bank loan. We wrap the mortgage, they make payments to us, and we in turn make the payment to the first or second mortgage for them, but they're paying our loan at the note rate of at least 12% interest rate.
All right, so they will no longer pay their first and second mortgage directly. They're going to pay us one monthly loan payment. We will make payments on the first and second mortgage out of their payment to us.
That is right.
And we're talking about a $3 million loan here, so they're looking at $30,000 a month in payments or more.
Right.
And then on top of that, they want to do principal pay downs. So That is a really interesting deal. All right, now this one is just in. Frankly, you may not even know anything about this one yet. Are you familiar with this one?
Not yet.
Because I just heard about this. It's just in. It probably hasn't even reached you.
Our desk yet? Okay.
It's an $8 million purchase of a commercial building. So that sounds like it's kind of bigger than what we do. We're really not doing loans much more than $3 million right now.
Right.
But the seller is willing to do a 70% owner carry. So $5.6 million. That puts it in our range at a $2.4 million loan, 12 months interest only. Again, 100% financing. We love these 100% financing deals. If you come across somebody that wants to buy a property, even if it's a big property, like $8 million, they don't have to have a lot of money. They're going to need to probably pay for the appraisal and loan doc fees. So there's at least, $5,000 to $10,000 of costs that they do have to pay for. Usually, I mean, almost
On an
always.
$8 million loan.
They got to pay that, right? Even on a $3 million loan, they got to put something down to cover those costs, right?
Right. Appraisal and title and attorney fees.
So that's basic stuff. But if the seller is willing to carry the loan, now by carry, it means the buyer is going to have two mortgages. One with us, they'll have a second one with the seller, and they need to come to agreement with the seller on what the terms would be. We see a lot of people are offering 3 to 5 year terms where they pay off the whole thing over 3 years. But you could do whatever you want. You can have no payments for 10 years. You can have a partnership. Frankly, we don't care what the deal is, as long as the buyer works it out with the seller and everybody agrees to it. Then we'll come in and put in our max 50%, maybe max 60% LTV.
Right.
Okay, great. So those are some 5 deals. I just want to throw something out there. If you're watching this, we're going to be talking about this next week, but we are going to be looking for wholesale reps for the Lentera lending product. That's people who go out and find other brokers and bring them to us, manage the relationship, and the broker is going to work their deal, and you'll be on our side of the transaction. More of that next week, so watch for that. But with it, we'll go ahead and start talking about we talked about some loans that we have in the pipeline right now. Any one of those could fall apart. So let's skip over this. There's 5 reasons. Keep going. 5 things that kill a deal. What are the 5 things that could possibly kill a deal?
Appraisals, title.
Now, when I said this to David, he said there's only 2 things, but there's definitely 5. I've got them listed here.
Right. Crazy borrower. All right. We've had some crazy borrowers.
We had a crazy borrower recently. So bad appraisal means you think it's worth $2 million. You find out it's actually worth $1 million after the appraisal. And that's what we mean by bad appraisal.
It doesn't come in at value. That's what we're talking about. The value is not what you think it is.
It would be, right.
Title problems could be anything. Title problems, we have one right now. We have a title problem where the title company is requesting that we show a power of attorney from 1973.
Seriously?
I wish I was kidding you. So we're
What
working
is that?
through it.
So a power of attorney was created in 73. That's a long time ago, if you're doing the math. And 45 years ago, to be exact. And why do they need it now?
Because the person...
That's longer ago than...
Then you are old.
Older than me and older than the things that happened with the Supreme Court guy. Anyway.
It's older than me by like 10 years. Thank you for
All
that.
Right.
Thank you, everybody.
All right,
Thank you. Anyway.
Why would you need something from 73, honestly?
Because what happened is his grandmother was able to sign the house over to his aunt, and in order to do that, the grandmother needed a power of attorney to act in behalf of the estate at the time in 72 or 73 when this happened.
So the aunt has owned it since 73,
The aunt
and
and,
everybody's
the aunt
fine
and
with
grandmother are long gone, man.
it. The aunt also.
They died in the 80s.
Oh man.
Okay, so point being, you will run into some crazy title problems, and what has to happen on this title problem, they have to go to court and do what's called a quiet title to get the title cleared up and in their
A
name.
quiet title.
Yep.
That's a new one for me.
Yeah.
Okay, so bad appraisals,
Title
problems, crazy borrowers. We just had one recently.
Who?
Right? We just had one. We had an appraiser was trying to appraise the borrower's property, and the borrower got in this flame-screaming email war that went back and forth with the appraiser, threatening to sue him, ended up threatening to sue us. If a borrower threatens to sue us and we haven't even given you a loan yet, you're out. You fall in the crazy borrower category, all right? So I'm sorry, we're not going to give a loan to somebody who's threatening to sue us before we've even given you a loan.
Right. Makes sense.
Annoying lawyers. We had a lawyer recently that was asking for all sorts of stuff, and we had to go back and tell the borrower, fine, go get the loan from your lawyer. Right? If the lawyer wants a bunch of weird things that don't exist, then get the money from him. And that helped the person understand that the lawyer's not actually the one giving the money. They don't call the shots. They ask for weird stuff. And then last but not least, cold feet. Some people change their mind, decide they don't need the money. Maybe they win the lotto.
Right, like
And,
I did 4 times straight every week.
So those are some of the reasons that it might kill a deal. Look at this. Or did you put those credits out there?
Going to.
All right. Rhoda's running the show for us today, so we're going to thank Rhoda for that. Let's talk
Yay,
about a
Rhoda.
few deals that didn't go through, because maybe had to do one of those. Can you think of anything?
Quite frankly, Tim, all the deals that don't go through for me really are appraisal and title. I very rarely run into lawyers or crazy borrowers. Once in a while I run into those type of things, but quite frankly, in my career, you get borrowers that get cold feet, so I'll give you that. I'll give you a couple crazy borrowers a year. I'll give you a lawyer here or there, but to be quite frank with you, the key
Mostly
thing is
appraisal and title.
appraisal and title. The property doesn't appraise for what you say it's going to appraise for, and comes in lower, or there's title problems with judgments, liens, and stuff from 1972 or 3 that need to be cleared up.
I know we have a loan that's in process right now where we have been working on it for 2 months, and then you finally actually communicated with the borrower, and the borrower had no idea what the rates and terms were, because the person we were talking to was not giving the correct information to the next person, or who was not giving it. There was 3 or 4 steps in between, right?
Yeah, and that just wasted a
So
lot
that
of
can kill a
everybody's
deal.
time.
If the borrower doesn't actually know what's going on because we're working with a broker that's not communicating, then you just waste a bunch of time on a deal that wasn't there to begin with.
Right.
So that happens. What's something else? On gas stations, you could have environmental
problems. You could have phase 1 problems or issues where the tanks, where we order a phase 1 environmental study, find out the tanks were leaking or have had leaks in the past. You can get environmental problems on your loans as well too.
Okay.
But I like to leave things on a positive note.
There's lots of positive things. We got 5 deals that are in process right now, all $1 million plus, and those are just the ones we talked about. We have other ones. We want your $1 million deals, $1 million real estate deals. I sent out an email last week. I got a lot of crazy calls. Not all of them were real estate. We want $1 million plus real estate deals. If that's all we did from now on, we'd be very happy. So we need a property worth at least $2 million. We're doing $1 million loan. If you are interested in going out and doing 100% financing purchases, and you can work out a deal with the seller, great. We would love to give you that loan to help you buy that property. Also, large cash outs. If you need cash, you got a lot of money wrapped up in equity in a property, you have severe credit problems which are stopping you from going to normal lenders, we would love to give you money. So give us a call, go fill out the form, let us know, and that's what we're here for. All right, well, that's it. I guess we'll go ahead and wrap it up for the day. Thanks, everybody, for coming on. Remember to come back next week if you're interested in being a wholesale rep for some unique lending that you cannot get anywhere else. With that said, thanks for coming on.
And roll those credits, Rhoda.
And roll the credits. Thank you, Rhoda, for running the show. All right.
Good night, everybody.
Bye.